Hey, thanks for having us. I think we need to put to bed now the notion that Powell does not know what he's doing. I think he truly is the smartest person in the room. Many clients that we talk to, I echo what Tom had to say, have made these binary decisions that the Fed is making a major mistake. I think he's been a wonderful Fed chairman, and he did a masterful job today. The train has left the station. We're going to be raising rates, and that's a good thing, remember, because that means the economy can stand on its own 2 feet. And our work shows that the market can, will, and should go up alongside interest rates. Now, I think one of the things that you have to kind of worry about, and you mentioned it, that if growth slows, what does that mean for the market? So I learned a long time ago that when growth is scarce, growth outperforms. Think about that. And so we as investors have already decided that it's going to be a value market. And we, in our strategy, quite frankly, are positioned accordingly over the next 12 months, meaning overweight financials, discretionary materials, and industrials. But I think that's really what's going on here, this tug of war between growth and value. And the market itself has been so resilient. Look at these consumer staple-ish tech names that have kind of bottomed out and led the market. And the reason why they've done that, Scott, is because they provide investors with consistent earnings. I believe the best place in the world to be is North America because of earnings and because of the consistency of earnings in Canada, the United States. And I think investors are going to pay for that. And so the market is a market of stocks. I think too many people are making decisions on the index level. There's lots of great stocks that have both growth and value attributes, big and small cap attributes, and that's where you should be.
But to discuss this a little bit further, you say if the economy slows. It's not a matter of if, it's when, isn't it?
It is, and it's a great point, and that's why we're not going all in on value, quite frankly. I think you have to own both growth and value and be much more balanced. And remember, when we came out with our 2021 forecast in November of 2022 forecast, in November of 2021, we said 5,300, and that means we are going to have a big rally the second half of the year and some volatility the first half of the year. But listen, I think that growth has to normalize, and it's going to be a transition to normalcy, not only in terms of interest rates, inflation, valuation, and earnings growth. This is going to be a path. It's not going to just happen in 2022, Scott. It's going to be into 2023. Quite frankly, if you want to hear something bearish about Belski, I would say that the likelihood of a bear market and or recession happens after those things normalize, well into 2023 and 2024.